If you're a small business owner and you're not getting any financial guidance before the end of 2025, you're going to be in a really bad position where you're overpaying tens of thousands of dollars. My name is Alex. I'm a CPA with Stronghold Accounting. My background was auditing the financials of publicly traded companies, and now we help small businesses through our accounting and advisory services. And I want to talk about the must-do 3 things before year end for your small business. So the first thing from a small business owner perspective before year end that you need to do is understand where your expected profit is going to be at. So if you're projecting $300,000 in profit and you haven't paid any tax throughout the year, you got to know you're going to be hit with a massive tax bill. That's why being proactive is so much more important than being reactive. If you can make smaller payments on a quarterly basis, you're going to avoid penalty and you're going to avoid the massive headache at year end when you have to pay a huge lump sum. So number 1, we need to understand what is the expected profit. And we're at November, December right now. You should be able to project where you're going to end the year at based on the prior 11 months. So let's say, for example, we know we have, $300,000 in profit, or we have no profit. Then we can do step 2, which is capture any missed deductions. So number 2 is capturing those missed deductions. So this is massive. Most small business owners don't even know the deductions that are afforded to them. If you're not capturing some of the big hitters like home office, vehicle, retirement accounts, if you have children on payroll, optimizing your salary. So making sure the way you pay yourself, whether a distribution or a salary, is optimized to put you in the lowest possible tax position. This is massive. But in order to do that, we need to know if you're even profitable, right? Because if you're sitting at a net loss, it really doesn't help you much to accelerate that loss this year. But if you're in a massive profit position, capturing all of the legal and ethical missed deductions is a must. For our clients, we send out what's called a tax shield questionnaire, which comes out every single December, and they're able to answer questions related to their home office, vehicle, retirement accounts, utilities, etc., to capture all of these deductions that don't run through the business account. That's a key thing, is how do I actually capture deductions that aren't running through my business account? And we need to substantiate that with documentation so we can deduct what the actual business portion of those personal expenses were. To give you an example, think about home office, right? So where a percentage of your home can be used for business, and you can write off a percentage of your utilities, your rent, your mortgage interest, mortgage insurance, HOA fees, etc. But substantiating that and making sure you're audit ready is key. So we send out that tax shield in December and we finalize it by January so we can add those business deductions that are legal and ethical before sending off to the tax preparer so they're in the best tax position possible. And the last thing to do before year end is to check if you've paid yourself a reasonable salary. So if you're an LLC taxed as an S corporation, which most small businesses are in America, you need to pay yourself what the IRS determines a reasonable salary. And so the IRS doesn't look at this on a weekly paycheck basis, a monthly basis. It looks at it on an annual basis. It looks at your total W-2 earnings for the year. And if they deem it's unreasonable, let's say a reasonable salary for you is $100,000, but you only paid yourself $20,000. That $80,000 difference, they're going to say, hey, you understated your salary by $80,000. We are actually going to record that $80,000 as salary and tax you the payroll tax that you would have paid on that. So that $80,000, just to give you an example, could be anywhere around $12,000 of additional tax. So it's very important that you have a reasonable salary put in place. So just to recap, at year end, you need to do 3 things. Number 1, you need to understand where your profit position is for the full year. Are you at a net loss? Are you very high in profitability? Have you contributed taxes throughout the year in terms of estimated payments so you're on track and you're proactive instead of reactive and paying a massive bill at year end now and kind of stuck with not enough cash? The second thing is to capture missed deductions. So if you are in a very high profit position, you need to maximize the legal and ethical deductions. And we do that through our tax shield, and tax strategists will do that by capturing all of the missed deductions that you may not even be aware that you can take. And the last thing is making sure you're paying yourself a reasonable salary so you're not penalized and having to pay that $12,000 in additional tax that I went through on that example. So if you can do those 3 things, you're going to be in a really great position before year end, ahead of 90% of business owners, I would say. So those are my tips for today. Best of luck with year end coming. If you're needing some guidance, you can check out strongholdaccountants.com/ free consult. We help small business owners with accounting and advisory throughout the year. It's a flat weekly subscription. Again, my name is Alex. I'm a CPA with Stronghold Accounting, and it was great to talk to you and great to give you some good information, and hopefully it makes a difference. Thank you so much for watching. Take care.